Good morning, members. It's past the appointed time, and we have a quorum. I call the meeting to order. Today we are here to listen to the briefing on the work of the Hong Kong Monetary Authority. I welcome members for joining us. Before the meeting, the Hong Kong MA gave us a paper, and there is a PowerPoint presentation tabled. And let's welcome Mr. Norman Chan, Chief Executive of the Hong Kong MA, and his team to join us. Good morning. I'd like to draw members' attention to the decision made in the meeting on the 10th of October. In relation to this agenda item, the panel will also discuss about the charges on inactive account or account with low balance, and also the difficulties of bureau de change in opening a bank account. And at the request of some members, the panel will also discuss with the Hong Kong MA about the Shanghai Pilot Free Trade Zone and the Qianhai Hong Kong and the Qianhai Hong Kong Shenzhen Modern Service Cooperation Zone and its impact on Hong Kong. Mr. Chan, and I'd like to report to members the work of the Hong Kong MA. The first is the assessment of risk to Hong Kong's financial stability. Hong Kong is a small and external economy, so we're subject to changes in the global economy. Ever since the financial crisis in 2008 and the collapse of Lehman Brothers, it's been over 5 years. And I'd like to give you a review. There are some special characteristics in the past few years. We see that in major economies, their central banks has launched ultra-loose monetary policy. That has effect in two areas. Interest rate has been reduced to very low, close to zero. And when it's at that stage, they will have ultra-loose quantitative easing to purchase, to get loans and issue bond. And every time when they issue bonds, they will have to do so by balance sheets. You see that for the U.S., before 2008, in the third quarter, they have 1.2 trillion on their balance sheets. It's increased by more than twofold to close to 4 trillion. And they also purchase bonds at the rate of $8.5 trillion in the euro area. It has increased from 1.5 trillion to 2.3 trillion. The same happens to UK. You see that on their balance sheets, it has increased by close to 200%. You may ask, in relation to all these years of ultra-loose monetary policy, what are the effects? First, the US. As you know, after the bursting of the housing market bubbles, it's been a few years of recovery and is on its path up. But momentum is still subpar and the rate of recovery is still weak. It is expected that the economic growth this year will be 1.6%. The unemployment rate has dropped from 10 to 7.3%. And during the monetary crisis, they have suffered a job loss of 8.7 million jobs. It has been reduced to 7.2 million. With an improving unemployment rate, there are some uncertainties because the labor participation rate, that is, number of people employed plus a number of people unemployed, above 60 is dropping. The latest figure is 62.8%, which is the record low in the past 3 years. So it shows that the labor participation rate in U.S. is not very good. The federal government, because of funding allocation problems, it was put to close to a halt. After consolidation, which is agreed on, the different parties still have a very divergent views on the way forward. So there are uncertainties. In the euro area, in the past 2 or 3 years, there has been significant shocks in the euro area. It has calmed down. And after economic contraction for 6 quarters, in the second quarter of this year, there is a slight improvement, but only for Germany and France. The latest figure released last night show that it has weakened. For the third quarter is minus 0.1% growth, which is worse than the second quarter. Unemployment rate in the euro area is rather high. It's over 12%. In areas like Spain, it's even worse, 26%. Greece, 27%. The government would like to reduce debt, reduce deficit, which will drag the rate of recovery down. And there is a further reduction of interest rate by 25 basis points to 0.25%. The extent of further reduction is low, so the boost to the economy will be limited. Japan, in about 2010, they implemented quantitative easing policies, but it hasn't drawn much attention because the effect has been mediocre. Since the Abe government has taken office, they have introduced QQE. The term they used was 3 arrows. Monetary policy will be strengthened, and there will be more physical measures to boost the economy. And a third arrow is structural reform. After the Abe government has taken office, the first 2 arrows has left the bowl. For the third one, the structural reform, we are still waiting to see what measures will be put in place. Market sentiment has improved. The latest economic forecast is 1.5%, which is rather high when it comes to inflation. And for quite some time, the inflation was forecast to be 0.5%. And they think that the economic growth this year will be 2.7%, which is a significant increase from 0.5% in the past few years. And I've gone through some major economies. Is it the case that market sentiment is quite good and the way forward is looking up? Let me draw your attention to this slide. This is about private sector and sovereign liabilities as percentage to GDP in 4 major economies. Well, the euro debt crisis and the global economic crisis is a result of the private sector borrowing too much, and in this regard, it is not looking good. Say, for example, in the U.S. in the past 5 years, they have about 7 trillion, and it's an increase from 8 trillion to about 15 trillion, an increase by 6 trillion. And as you know that there is the different parties is still at loggerheads. And you see that for the liability is increased from 231% to 249%, an increase by 17 percentage points. In the euro area, there is an increase by $4 trillion US. Japan, sovereign liabilities has increased by $5 trillion. And as percentage point to GDP is increased from 413% to 476% and up by 63%. And that is similar in the UK. Well, the imbalance is a result of overborrowing, and in the past few years, in relation to these major economies, the situation hasn't improved. The US Fed decision on interest rate heavily influenced that of the rest of the world. The US Fed's view is that quantitative easing will do more harm than good, while others have a different view. But I think the impact will only surface when they exit from the market. At the time when they exit the market is because the economy is strong enough to stand on its own 2 feet. And that's when we will see the actual effect. In May this year, the US Fed and its chairman hinted at reducing asset purchases in this year. And in June, they say that there will be what they have provided in June, a tapering roadmap. After such announcements, you see that there is a surge of interest rates in US and the world. For 10-year bond, it has increased by over 100 basis points. And you see that global stock market plummeted. In emerging markets, there is a large amount of capital outflow and currency depreciation. In September this year, the Fed surprised markets by not tapering QE. As a result, the global markets broadly stabilized. In October, they continue with the ultra-loose monetary policies. At the time when the US Fed exit the market, well, the time and the scale is still unknown. And for us, when they actually exit the market, will we still see such a strong market reaction as in May and June? It is still uncertain. Let me explain to you the situation in May and June, the market reaction when there were hints about a QE tapering.
The blue line represents US, red for UK, and green for Germany. As soon as the idea of reducing asset purchases was floated, the sovereign bond yields for several countries went up, although it subsequently came down somewhat, but comparing to before, it was an increase by 100 basis points. For emerging markets, between May and September, capital outflow caused a depreciation of their currencies, or at least there was a pressure. For India, it was depreciated by at least 20%, and Brazil, Indonesia, Turkey as well, they all face the pressure of depreciation because of the statement on reducing asset purchases. This chart shows the rise in yield spread. That's marked in red for Turkey. The interest rose by 3.3, Indonesia 2.5, and for other countries ranging from 1 to 2% increase. Well, just now I talked about countries or economies facing pressure, capital outflow pressure. And here you see that Turkey, South Africa, India, and etc. The red bar shows the current account balance, and the chart on the left shows deficit, and on the right it shows surplus. So apparently, because of for those facing greater pressure on depreciation and increase in interest rate, etc., these countries suffer from a deficit in the current account balance. As for Hong Kong, it's circled in red. In the first quarter, you can see that there is a slight deficit as far as the current account balance was concerned. Although on the whole, it's on the right now, 8.9% to the before, and for the first and second quarter, it's a small deficit. So, for those having a bad current account balance situation, they might face greater pressure when the U.S. Fed withdraws from the market. So, when will the U.S. asset purchase program be tapered? The market generally expects that the Fed will begin reducing asset purchases in March next year. But whether this expectation will be met, it's still uncertain. We can see from these previous several FOMC meetings. Since June, the Federal Reserve has been making adjustments on the asset purchase program. In June, the chairman of Federal Reserve said that the asset purchases program may be brought to a halt by the middle of next year, when the unemployment rate is expected to fall to about 7%. However, there won't be any increase in interest rate if the unemployment rate is not above 6.5%. However, in September, the Fed no longer used an unemployment rate falling to 7 as a threshold for ending asset purchases, and it also suggested that the rate may not rise until unemployment rate drops considerably below 6.5%. And in October, because of tightening financial conditions, coupled with uncertainty in public finance or public fiscal policy, the scale of asset purchases program will remain the same. And that was the remark made in September. But in October, this reference was removed. So whether the QE taper or the asset purchase program will be tapered next year is still unknown. As for mainland, growth accelerated in the third quarter to 7.7%, which can reach the central government's target of 7.5%. Beijing government will focus on economic transformation and upgrading for the purpose of economic restructuring. Monetary policy, neither tightening nor loosening, is expected, with focus on optimizing the use of credit. And there will also be some adjustment to certain industries with less productivity. And there will also be management on local government financing platforms. And the third plenary session pledged to deepen reforms and improve allocation of financial resources. This will be the key. According to some media reports, it was suggested that no details have been disclosed, but I understand that the details will not be disclosed until reports which will come out later. Now, so much for the global picture. Let's talk about Hong Kong. Financial stability. Fund flows is, of course, one crucial factor. Since the fourth quarter, there was an outflow of $100 billion. So far, the fund flow remains stable. Property market, the red line, represents the tightening measures or the government fiscal measures, and the blue bars represent volume of transaction. Every time the government announced the measures, the transaction volume reduced. Now it's about 3,800 transactions, comparing to 2010, when the market was more exuberant. On average, there was a monthly there was on a monthly basis 11,000 transactions. Property prices. This chart shows the information from RVD on the change in property prices. We see two different trends. For large-size flats, the prices have declined a bit by 2.2% since February. For small and medium-sized flats, since February, it has been on the rise by a rise of 2.4%. So the trend in property market remains uncertain, and so far we can't say for certain whether the property market cycle has reversed. That is to say, we're uncertain whether the trend is going down. And the bank lending growth, this chart shows the mortgage loan growth marked in red, and after several rounds of measures, housing or property market transactions growth at a much slower pace. So as you can see, coupled with the blue line, after moderated growth is on the rise again. The annual interest rate is close to 18 to 19%. And in this chart, we look at the risk management aspect. This is the loan to deposit ratios. Hong Kong dollar, the red line. It remains stable at 82%. That is, $82 out of $100 deposit will become loans. For US dollar, the green line, you see a more substantial increase. The lowest was in 2009, 30%. Now it's 86%. It's quite a rapid growth, and if there is continuous loan growth, that means there are more businesses, and this in itself is not a problem. But we think that there is no retail loan network. It's relied on interbank loans, and that is why we like to see more stable sources for funding. And the HKMA has required individual banks to comply with these requirements. Depending on the sources of funding, we do have these requirements. So to conclude, number one, the U.S. Fed's policy exit would affect the global economy and financial markets. As to when the policy exit will take effect and the scale of the effect of exit is still highly uncertain. In May and June this year, what we saw is that for emerging markets, once the policy exit starts, they could face risk of capital outflows and currency depreciation. That is, what happened in May and June would be repeated. And And if the policy exit cause interest rates to rise and global asset markets to become volatile, Hong Kong would also become affected, especially with the exuberant property market. And I said as before that the household indebtedness is standing at 61% GDP, and the current account balance for the last quarter had third deficits, and Hong Kong must be ready. Mr. Chan, please speed up because members would like to ask questions. I'll defer to Peter to talk about the second part. The second part is about development of financial infrastructure. On retail payment initiatives, one of the key initiatives is to build a legislative framework and infrastructure for users to use internet or electronic payment services. And we conducted a 3-month public consultation for stored value facilities and retail payment. And we have started preparatory work on drafting of bill. It will be introduced in the second half of next year to LegCo. Electronic Bill Presentment and Payment Services, EBPP, and starting from December this year, the public can benefit from one-stop EBPP service gradually launched by 23 participating banks. The scope of service include business-to-person and business-to-business e-billing and e-payments, cross-border e-billing and e-payments, e-donation, and presentment of e-receipt online. And e-bills can be handled in Hong Kong dollars, renminbi, and US dollars. On NFC mobile payment service, the HKMA and HCAP formed the task force, and at the end of November, the set of standards and guidelines on NFC mobile payment service will be launched for banks to follow, and a shared infrastructure will be ready by the end of 2013 for banks' use. We expect that after the issuance of standards and guidelines, the mobile payment service will continue to expand. And in 2014, we will launch the coin collection mobile kiosks pilot scheme for the public to be provided with a convenient channel of exchanging coins to enhance circulation and reduce minting expenditure. Users may choose 2 mobile kiosks will, at various locations, collect coins throughout Hong Kong, and users may choose to receive banknotes in exchange of coins or add value to Octopus cards.
We expect the service to be launched in the middle of next year. We will have publicity campaign and announce the coin collection locations and schedule for the benefits of the public. You have finished? Well, I will continue very quickly because I will touch on certain issues that are close to the heart of the panel. First, Basel III implementation progress. For the first phase, that is the minimum capital ratio, is implemented in Hong Kong. Starting from the 1st of January this year, the relevant rules are put in place, and on the 3rd of June, the relevant disclosure rules are also put in place. At the end of June, that is the meeting of minimum capital ratio is satisfactory. For the Tier 1, is at 13%, and the other one is 16%, which is far greater than the requirement of Basel III. And in relation to banks with systematic risk, we will immediately start the ratio requirements, and when we have the latest information, we will come back to you. And in relation to the liquidity standard, we have started the consultation information, and we will start with formulating the rules at the beginning of next year. We will explain to the panel about the detailed requirements. Another issue that is in relation to the international arena as well is that we have to put in place risk regulation. And in relation to banks with systematical importance, we have to deal with them. We have to deal with the problem of banks being too big to fall. One of the major tasks is to implement legislative reform to make sure that the legal framework will deal with problems related to such financial institutions. About 2 years ago, the Financial Stability Board issued a document. You find the name of the document here. It's key attributes for short. It states that under what circumstances you will have power and the relevant structure to deal with problematic financial institutions. If we compare Hong Kong's legal framework with the requirement under these key attributes, we have gaps to fill, and it involves a legislative reform. The FSB has set down a deadline for the reform by the end of 2015. And we have drawn reference to overseas experience. There are many stakeholders. We have to have a thorough consideration and conduct extensive public consultation. Our understanding is that the FSTB will launch the consultation shortly, and the relevant institutions are actively participating in the work. Investor and consumer protection. You may recall that at the end of October, the Hong Kong MA signed the Treat Customers Fairly Charter with the 22 banks. On the same day, major retail banks announced that they will stop charging dormant account fees, and they will waive low balance charges for underprivileged. Apart from these two measures, they will also provide a basic account service that are waived from low balance charges. So vulnerable group customers can choose these basic account services if they can't keep a low balance. And we will launch the first consumer education program. It will start in late November through radio programs and roving shows. We will start the education program. It will start off as safe use of electronic banking services, and it aims to help the public become smart and responsible consumers. Lastly, combat against money laundering. In the past few years, this is actively taken up, and we are an international financial service center. We are also a member of the Financial Action Task Force. We have the responsibility to implement the relevant standards. In April last year, we put in place the Anti-Laundering and Counter-Terrorist Financing Ordinance. There are two important elements. First is the due diligence requirements and record requirements. In relation to the first, banks will have to continuously monitor suspicious transactions and report such transactions. For bureau de change, they deal with a large amount of cash, so there is a high risk when it comes to money laundering activities. So there will be further due diligence exercise on the part of the bank. And this is very important to the risk management against money laundering. And I will now defer to Mr. Yun. And this is in relation to Hong Kong as an offshore renminbi center. You see that renminbi trade is developing steadily, as you see that on the left. for the first 9 months is about 263 billion. It's the $2.6 trillion. It's at the end of September. It's reached $976 billion, an increase of 26%. As you see that for dim sum bond, the development in Hong Kong is quite good. There has been adjustments in the market, so the amount of issuance has dropped. Starting from September, it has picked up again. For the first 9 months this year, the volume of issuance is 75.4 billion. Outstanding amount is about 290 billion renminbi. And also there is an increase of $107 billion and up by 36%. The Hong Kong platform does not just support renminbi business development by banks. There are a lot of participation from local and overseas banks. And this platform is used by international banks as well. We will continue to promote this point. And we will promote cooperation with overseas banks. We have already a cooperation group with the UK and Australia, and we will soon launch another cooperation campaign with Malaysia. As you know that at the end of September, the State Council announced a framework plan for Shanghai Pilot Free Trade Zone, FTZ, and it involves capital account convertibility and foreign exchange management. And when it comes to innovations and liberalization, we look at support to the relevant areas. When it comes to capital account convertibility and foreign exchange management, these are still being studied. There are a lot of opportunities for Hong Kong and Shanghai to strengthen cooperation to create a win-win situation. Tianhai. In June last year, the State Council approved the relevant policy. Measures are being implemented. At the end of last year, there was a cross-border RMB loan management arrangement. For those that are incorporated and registered in Tianhai, they can borrow RMB capital from Hong Kong banks. As at the end of August, such loan amount to 7 billion renminbi. Investment performance of the exchange fund in the third quarter. There is a high volatility in the market for this quarter, especially for bonds, where we thought that in July and August there will be QE tapering. So you see that the yield has increased to as high as 3%. In mid-September, we know that there will not be QE tapering, so it has dropped to about 2%. Our estimate for the third quarter is on the upside, but there are some geopolitics, Syria, etc., though there are volatilities. And Euro has picked up, and they're all reflected in the performance of the third quarter. For Hong Kong equities, we have made a profit of 13.3 trillion, and for other equities, 17.9, for bonds and other investments, 1.8 and for foreign exchange is about 15. So as at the end of this quarter is a total of 49 billion. And for 2013, there is a rate of 5% payment to physical reserves. 5 members indicated they would like to ask questions. Wong Kok King, Tan Ka Biu, Albert Ho, Sin Chong Kai, and Chan Kin Paul. 4 minutes each. Mr. Wong Kok King. So in relation to Hong Kong MA's protection of investors, I'd like to ask some questions. In July this year, I wrote to the administration. There was no consultation, and they just issue notifications to penalize small account holders. They include dominant account holders and those who can't meet the low balance requirement. And this has been in place for close to 10 years. People are unhappy. After I've written the letter, I see that the Hong Kong MA, in less than 3 months, asked banks to sign the Treat Customers Fairly Charter. Leading banks announced that they will waive this unreasonable charge on income on a dormant account, and for low balance charges, fees are also waived. And I really appreciate the work of the Hong Kong MA in the past few months, and I thank the CEO, Mr. Norman Chan, for his good work. And I have some questions for Mr. Chan. Is it the case that all banks have waived the dormant account fees? And is it the case that all 22 banks have waived the low balance fees? Is it the case that all banks have set up, put in place basic account service for the underprivileged? Mr. Chan. First of all, perhaps I will ask Arthur to answer members' question. Banks themselves are commercial entities, but because of the uniqueness of their service, our regulation on them is higher than others. But we have to be very careful because banks are commercial entities, they are businesses, so they, of course, will aim at making profits, and they have to keep costs down. We understand that there are different aspirations, and when it comes to fees, they will have an impact on the underprivileged.
So to treat customers fairly and honestly, the discussion started last year. Mr. Wong, you wrote to us in July this year, and we therefore worked harder. Now, Arthur, over to you. Well, we're still following up on it. We signed the charter on the 28th of October, and on the same day, the 5 or 6 leading retail banks announced the waivers. And in the following 2 weeks, we followed up on the remaining 16 banks. As I understand, a considerable number of banks already introduced this waiver arrangement, but I can't say that all 22 banks have now waived their fees, but we will actively follow up on it. Madam Chair, just a simple follow-up. I hope the HKMA can, after the meeting, give us information in writing whether the remaining 16 banks will follow suit, because according to today's report, it says that banks decided to stop charging dominant account fees. So my understanding is that banks refer to all of the banks. So apart from the 6 major banks, my understanding now is that the remaining banks have yet to waive fees. So my question is whether the remaining 16 banks have stopped charging fees. Next, Mr. Tan Ka-pil. In fact, the QE policy introduced by the U.S. over the past few years did have impact on Hong Kong because we have high inflation rate. Ordinary employees may suffer a loss if they don't know how to invest their money. So there is an expectation that the QE tapering will slow down our inflation. Recently it's said that inflation rate can be reflected in the rise in vegetable prices. So it's very much to do with the livelihood of Hong Kong people, and I'd like to know what the impact of QE tapering is on Hong Kong people. And some say that we should cancel the pact with US dollars and be packed with renminbi instead. And the former CEO also suggested that we can depact with US dollar. So what is your view on QE tapering? Much of the inflation rate in Hong Kong, at least 1/3, has to do with property prices and rentals in Hong Kong. Of course, food prices, commodity prices, and energy prices also affect the inflation rate. So it's subject to a basket of factors. The ultra-loose monetary policy will gradually be tapered. And after the stoppage of the bond buying program, interest rates may go up. The interest rate may go back to the normal level for the U.S. If the normal inflation rate is on average 2%, then the normal interest rate should be 4 or 5%. So it will, to a certain extent, suppress property prices. This will lower the rise in property prices, which may be a good factor for lowering inflation. As for imported prices like imported goods like energy and certain commodities, it has a significant impact on inflation. In the past few years, when the BRICS, those emerging economies were growing rapidly, prices for raw materials and metals grew very quickly, and that also caused our prices to go up. For emerging economies, economic growth has moderated. If interest rates go up, then it can or it may suppress the over-exuberant economic growth in these emerging economies. So the withdrawal from the market and a rise in interest rate may do good to the economy in Hong Kong. What about the packing Hong Kong dollar to US? As a small and open economy, and Hong Kong is an international financial center, if we have an anchor, so to speak, that means the US PAC arrangement. It's good for Hong Kong's stability. There are 4 prerequisites which have yet to be met: free convertibility of renminbi, and secondly, the mainland market has a very deep and wide market for Hong Kong to buy assets on a large scale to support this pact. And like I said just now, the market should be wide and deep, and our economic cycle should be more or less synchronized with the mainland market. Right now, our cycle is more synchronized with the U.S., so there is no consideration at all. We don't have the prerequisites to consider pegging to the renminbi. Mr. Albert Ho, I'd like the CEO to say something more about the property markets in Hong Kong. The last term and this term of government introduced 3 rounds of harsh measures to tackle the overheated property market. Transaction volume shrank substantially, but just on the figures, the numbers are still on the rise. So, CEO, can you give us more information? As far as the demand is concerned, does it come from local buyers? Are they mostly users? In near future, with limited supply, does it mean that on the books the numbers will still on the rise and the trend will not change until the U.S. Fed withdraws from the market? On page 15, slide 16, you can see that transaction volume reduced, but the trend is not clear. For example, in February this year, after the introduction of several measures, for large-sized flats, the prices went down by about 2%. For small and medium-sized flats, comparing to February, there was still a 2% increase. So we can see the 2 different trends in the local property market. With reduced transaction volume, it's hard to tell the trend in the property market. Recently, we see that for first-hand sale, there are concessionary measures, and the response was quite good. Subscription was good. However, for secondary market, transaction volume remained small, with some price cuts, so it's still uncertain what the trend in the property market will be. But we believe that the property market is also cyclical, which means that after some time, the upward cycle will be reversed to a downward one. And we do impose counter-cyclical measures. But when when the cycle turns downward, we will change our policies. Well, CEO, but please answer me this question. Prices remain high, and does it mean that it will be a long wait for prices to consolidate unless the U.S. Fed withdraws from the market? Mr. Chen? Changes in the property market are due to a number of factors. Supply, and we have land supply and supply in the completed and uncompleted flats, and also mortgage rates. And at present, it's standing at about 2%, but at once it was below 1%. If interest rates go up, mortgage interest rate will also go up, and it will pose a greater burden on mortgages, and this will cause the situation to become uncertain. Like I said, the QE tapering timetable is still uncertain. Mr. Sin Chung Kai, on slide 18, growth in mortgage loans slowed. Can you tell us some specific figures for home buyers or first-time home buyers? Is it the case that they take out substantial mortgage loans? I see in slide 16 or slide 18, the growth actually tapered. I'll see if Arthur has anything to supplement. We had the 6 rounds of counter-cyclical measures. The highest mortgage ratio cases continued to decrease. In 2009, for new mortgage loans, the loan-to-mortgage rate, the LTV was 64%, which means for $1 million flat, the mortgage could be $640,000, but now it's just 53 to 55%. Mr. Sin, please let Mr. Chan to respond. But has the top up on insurance been excluded? With insurance, you can take out more. This is the mortgage loan in real terms. That is to say, even if property prices remain the same, the LTV already decreased, and transaction volume, like I said, also decreased. So with reduced transaction volume, there is less keen demand for mortgage loans. But you can see that we're talking about the red line, mortgage loan growth. The growth has tapered. Arthur, let me supplement some information. We don't just look at the loan-to-value rate or mortgage-to-value ratio. It reduced from 64% to 53 to 55% at present. And we also need to look at the debt servicing ratio, DSR. Recently, after 6 rounds of measures, we also enhanced the stress test. As for repayment in September, the loan-to-income ratio stands at 35%.
Of course, with the stress test, it's 50% compared to the first time when with the requirement of 41% of a stress test is slightly lower. And as to whether how many of them are local and how many not, well, we don't differentiate on the type of borrowers. If your main income does not come from Hong Kong, the loan-to-value ratio is reduced further. And from then on, we started collecting data about the ratio of non-Hong Kong PR borrowers. Is about 40% in September. Is 4.2%, which is normal. So there is not much change in the past 2 years. Another question. You talk about the DSR. It's dropped from 40 to 35, the debt servicing ratio. It seems to be unreasonable. With property prices increasing, wages do not increase correspondingly. Is it the case that people now take out more money to purchase the property? Yes. We also require stress tests on banks for 300 points. Well, normally the DSR should not be over 50%. If the interest rate increased by 300 pips, the DSR should not be higher than 60%. Mr. Chen Kim-po, please turn to slide 19. And this is the loan-to-debt ratio for Hong Kong dollars. It's as high as 85%. Well, I thank Hong Kong MA for fighting for Hong Kong people to relax the 20,000 renminbi restriction. And well, with that relaxation, it's easier for Hong Kong people to convert to renminbi, and as a result, Hong Kong dollar deposit will reduce. Will it create pressure on increase of interest rates? Another point. Well, there are less coins used because more people use octopus. However, there is a reduction of use of coins by 6.3 by $1 billion. The issuance. Yes, you can think about it the other way around. Without electronic currency like octopus, then there will be a higher demand for coins, and it will take longer time for coins to be converted. But even with octopus, some say visitors will carry Hong Kong coins back home as souvenirs, and some Hong Kong people will keep the coins in a jar, so we cannot recycle them, and we have to mint coins, and the cost is increasing because the cost for metal is higher. That's why starting from next year we will have mobile exchange, mobile kiosk to recycle coins to boost circulation. In relation to Hong Kong dollar deposit and renminbi deposit, well, some shops say that they do not accept coins. Is it against the law? Well, first, about deposit. Let me answer that first. Well, as a result of an increase in RMB deposit, whether there will be pressure on Hong Kong dollar or whether it will be marginalized. No. For in the past 2 or 3 decades, we see that the ratio between Hong Kong D and other currencies is half and half, and this ratio still maintains. For overseas currencies, mainly US dollars, and there is now another major currency, renminbi, which accounts for about 10% and on the rise. So and at the same time, there is increase of Hong Kong D deposit. So it's a 50-50. But for other currencies, there are more deposits made in renminbi. So there is no problem of a reduction of Hong Kong D deposit. But of course, it's subject to changes in interest rate. There may be an increase of Hong Kong D deposit, but if the loan volume increases, it will affect liquidity. Peter, according to coins ordinance, coins are official currencies, and it is a legal tender. And when it comes to commercial transaction, decisions including methods of payments is to be decided by the shops. So whether to accept a certain banknotes or coins is a commercial decision. It is not mandatory for shops to accept coins. So that means if they reject it, it is not against the law. Next, Ms. Chan Yin Han. I have 2 questions. Just now, Mr. Sin Chung Kai and Mr. Albert Ho asked the questions, and it's close to the heart of Hong Kong people. Fed policy exits. What will happen if it takes place, and what will happen if it doesn't? If there is exit, it may be good as a whole for Hong Kong because everything will be normalized. And I have a question for Mr. Chen. With policy exit, we're concerned that people who own property, they rely on the low interest rate for the mortgage payment. And if there is exit, that may be problem for them. Without policy exit, well, the property prices for luxurious flats has dropped a little bit, but for medium-priced or low-priced properties is increased slightly. Apart from these cooling measures, should we be prepared? Mr. Chen, I'm sure that you have another string to your bow. So what do you have up your sleeve? And I hear that for new account holders, they do not have passbooks. Well, I've lived in an overseas country, and I did not have passbooks. I was surprised. And I think it's the same for Hong Kong people. Some of them, they are very used to having a passbook. For old people, they rely on the record, on the passbooks. For some people, well, they may think that it's no big deal, but for grassroots, they will find it inconvenient not to have a passbook. Mr. Chan, first, policy exit or not. There are some speculations, but there are a lot of uncertainties. We have to be prepared. If there is policy exit, interest rate will normalize. The impact on Hong Kong will be inevitable. That said, will we be resilient, or will we get knocked down and not able to get up again? Starting from 2009, we have counter-cyclical measures to prepare for such an eventuality. As Arthur said, you borrow to buy a flat. If you think that property prices will increase, then perhaps it may get to your head and you will borrow more than you should. So for the requirement for DSR have been built into these measures for an income of $100, and if they have taken out a loan, they use $35 to make payment for loans and mortgage. Everything is included, all kinds of loans. It's now 35%. They use $35 out of every 100 to make repayment. At the beginning, it was 41%. That is pre-tax. For a family who has a mortgage for investment, for self-occupation, well, if there is an increase of interest rate because of the stress test, if that will not be the case, that they will find themselves in a plight when they don't have enough money to live on when interest rate increases. I'll defer to Arthur for the passbook issue. Well, Ms. Chan's understanding is right. There is a trend in the banking sector to go paperless, so they will not launch account services with passbooks. But my understanding is that there are still some banks who offer such a service. They may not be large banks, but medium-sized banks, and that is still this choice. We encourage banks to introduce such changes gradually and to take into account the needs of different groups. Please be short. When you find that to be the case, you should put yourselves in the shoes of the public. It may affect the mass, in particular the elderly. They don't know much. If you ask them to call or use the computer, it's something that they are not familiar with. Should you just leave it to the market, or will you put in place some measures to help them? You've taken note of this. There are 6 members who are waiting to speak. 4 minutes each, it will take us to 1:30. So if there are no other members who would like to ask questions, I'll draw a line here. Christopher Chang, Wong Ting Kwok, Regina Ip, James Tien, James Tien, and James Toh. Well, we have to vacate this room at 10:30. Mr. Christopher Chang. I have a question for the CEO. Now, there are rumors from time to time about policy exit in the US. And Mr. Chen said there is only a slight improvement in the European economy. A few days ago, the Hong Kong MA announced the pooling of funds to buy in the UK property market. And that will be a lead time of 5 to 6 years. So have you assessed risks resulting from changes in the economy, and what is the rate of return? And if investments on property market is to increase, will you consider the Hong Kong property market? Mr. Chan. Thank you, Mr. Chan. In our diversification of investments, some is on real estate. And there are two major categories. First, by way of private funds, we will use fund managers to invest for us. The second category is to buy properties ourselves. When it comes to major cities in the world, there is large demand and they are quite resilient against a drop in the market. So it's medium to long-term investment. It's more than 3 to 5 years. It may be as long as 7 to 10 years, and we are prudent in our investment. We have conducted studies about the potential of the property market, and to make sure that it will meet our medium to long-term investment return. In terms of risk, well, in the realm of investment, it is unavoidable. Even the safest, the most stable investment for the U.S. bond, the yield has jumped from 1.6% to 3%, so it's 120 basis points. So even if it's as safe as this, there is fluctuation in prices and there is risk. We have to make choices. Of course, everything is down to proportion, and we will be cautious. Eddie? Investment on real estate. Well, it is one of the items in our portfolio. Other than conventional investment, we would like to invest in something that is quite separate. Say, for example, for real estate, rental return is about 4 to 6%. If it's held long term, it will have a stabilizing effect on our investment portfolio. We aim at major cities in the world, a major financial services center. Our investment is diversified and made in different economic cycles. And so far, we have not made such investments in Hong Kong. So you have not considered Hong Kong property market. Does it mean that our rate of return is lower? And with policy exit and increase in interest rate, with the cooling measures, will there be a big drop in our property market? And what is the risk of negative equity? Are we prepared to deal with such a change? Well, our decision is a decision of not to invest in Hong Kong. We have to take into consideration our role here. We are a regulator. And, we look at the different investments and there are risks. Since there is a conflict of roles, with us being the regulator, we decide not to invest in the Hong Kong property market.
Mr. Ong Teng Kwong, I'd like to follow up on the points about coins. As there were earlier media reports that some coins had been lost in the circulation. It was denied by the HKMA. The use of octopus card and coins collected by local people, for example, these are the contributing factors. And I understand that there will be a mobile coin collection facility. But I don't think this can resolve the problem. The problem is some major banks are charging customers for depositing large amounts of coins. As a result, vendors or local people are unwilling to take their coins to banks to avoid the charge. So can the HKMA set a period, for example, 3 months should be given for banks to offer free coin exchange for bank users? Will this have a greater effectiveness than something like a coin collection mobile kiosks? Now for coins, the amount minted is not low. Collection rate, however, is low. Some tourists would take away the coins, and some local people would also keep their coins at home instead of using them. Small vendors sometimes need coins for exchange, and they do keep the coins in their shops for this purpose. Maybe I can defer to my colleague to say something about fees. Well, I understand that if you take a jar of coins and ask the bank staff to count the coins for you, then it takes time and effort to count them. And if every user does the same, that as far as the time taken is concerned, it might not be very satisfactory. Arthur. Yes, we have sought an understanding with banks on coin exchange arrangements. Now, I understand for the majority of banks, they do set a certain criterion. If you exceed a certain limit of coins, it will not be free to process them, and different banks impose different limits. But I understand for ordinary amount of coins for processing, the banks should be able to process them free of charge. But like I said, banks are commercial organizations. There are operational costs involved, and I think there are justifications behind collecting fees. And I think coin collection mobile kiosks to us is an effective way to collect coins. I'd like to talk about the investment performance of HKMA. The last two slides talk about the investment performance of HKMA. And we look at the investment income, and we may be happy in looking at the 100 billion investment income. But I'd like to know the actual rate of return. Mr. Chan, this is not the investment income per se. This is the valuation as of our assets. It's mark to market. So for this quarter is 49 billion. Arthur, something on the rate of return. It's annualized normally. Last year it was 4.4%. For the first 9 months of this year, it's not easy to analyze it, but just by simple calculation is slightly over 1%, but we need to wait for the remaining of the year. Please let us know the rate of return as well, because taxpayers would like to know your performance. Your salaries are also pegged to market performance. Yes, can you provide this information? Now, on rate of return, it's usually analyzed. That's the market practice. But we can provide the figures. Now, please just add another column in the future. Just provide the annualized rate of return so that we can look at your report card. And please also tell us the base, that is the assets used in investment. Okay, please take note of this comment and try to work with us. Mr. James Tin. I also have a question following Mrs. Regina Yip's question. In this chart, we can see that apart from 2011-2012, the market was very volatile. We suffered a loss in Hong Kong equities and other equities, but in 2011. But in 2012, we made huge profits. Now, in 2011, it was on average. Now, that means that on average, throughout the years, we managed to have an income of 60 billion or so. So, Mr. Chan, can we say this to the government? We can regard this as recurrent expenditure. The underprivileged in Hong Kong needs help. The government is unwilling to give even $100 million. So, I think at least the income amounts to $2 to $3 trillion. If we have a low rate of return, 1 or 2 or even 3%, that will amount to 60 billion against market volatility. Do you have confidence? Because now you already have a rate of return of 2 to 3%. Can we tell the government to regard this as a recurrent revenue? If this money is taken out to help the vulnerable groups on financing, housing, healthcare, etc., the government will be able to do a better job, Mr. Chan. I think it's up to the Financial Secretary to decide how public money should be used, but we should understand, as Mr. James Tin observed, that there might be fluctuations. After policy exit next year, what will happen to the global market? In the first half of this year, we were unable to make money. The third quarter, well, our performance was better. What happens to the remaining of the year? So it's difficult to forecast. Now, for the 2.8 trillion in the exchange fund, we do have part of it in the fiscal reserves. So this year is 5% as far as investment income is concerned. 5% means what? How much? If it's time weighted, depending on the period. The dividend rate was 5%. Last year it was 5.6%. So payments to fiscal reserves could increase if there is a change, and then Financial Secretary could discuss with LegCo. 5% is equivalent to how much? This year, for the first 9 months, payment to fiscal reserves amounted to $27.8 billion as shown in the table. Last year, for the full year, at 5.6%, we paid $37.8 billion. That's from the fiscal reserves for investment, and we paid a dividend of $30 billion, about $27.8 billion last year. So you will continue to to generate income from investment. Mr. James Toh. My question may not be relevant to today's discussion, but it's related to HKMA. Earlier, non-locals, in particular mainlanders, purchased accumulators in Hong Kong, and some bankers from Hong Kong went to mainland for the purpose of opening accounts and going through the formalities. It may be good for Hong Kong because the banks could get more business, but afterwards, people complained and asked why Hong Kong banks could go to mainland to go through the formalities. Because for insurance, because of CIPA, etc., there are stringent requirements. The insurance sector is still striving for the opening up of the market. For banks, I don't know if this is all right, but I heard from people familiar with the practice that in fact it's not allowed in the mainland. Of course, if nothing goes wrong, we wouldn't hear complaints. But I heard about those complaints probably because some of them lost money. So I totally understand that it's all right for mainland investors to remit money to invest in Hong Kong. But I understand that a bank actually sent staff to go up to mainland to complete the process. Do we accept this kind of interaction? And is that really allowed in the mainland? Or we can go on as long as there is acquiescence? Well, it depends on individual cases. We discussed with Mr. James Toes before, and we met with some complainants. We're following up on some cases. On the whole, if a Hong Kong bank is licensed in the mainland, because some banks do have subsidiaries which are licensed in the mainland. If they have the license on the mainland, it means they can operate as banks in the mainland. However, if they don't have the relevant approval in the mainland to operate the banking businesses, to make offers to clients and give advice to clients on investment products, well, they can give investment advice to clients, but as far as offers are concerned, we understand that there could be a problem if they are not licensed to operate such a business. They should not do it. So I'd like to have more information on those specific cases. Thank you, Mr. Yun, for explaining more clearly to us that they can showcase their products just like the insurance sector. They can also hold exhibitions, etc. But the signing of contracts must take place in Hong Kong. So if that's the understanding, you might have to issue a circular to remind banks of the situation. We don't want to jump the gun by doing business in the mainland before they open up the market.
Please take note of members' view. I'm the last one in the first round. On the 30th anniversary of the links exchange rate, I've read an article of yours, Mr. Chen. You have given the detailed information about backgrounds and the history, pros and cons, and how the renminbi is not yet considered as a subject of pecking with Hong Kong dollars. It's because of the yet to be fully opened mainland market, and also the yet to be fully convertible yen, and a number of other measures. There is one very important issue, the role of renminbi in Hong Kong, and that in the future they are very important. Mr. Chen Kim-po asked a question. We've read from the press that you are trying to get the relaxation of the exchange limit of 20,000 renminbi. Apart from that, do you have anything in mind that you would like to get? Have you made a formal proposal to the central authorities to further open the renminbi market and to strengthen Hong Kong's role as an offshore renminbi center? Can you give us more information? There are a number of issues here. For the 20,000 renminbi exchange limit for individuals. We understand that the sector would like to see that relaxed when it comes to asset management tools or other products. They will take them a lot of time to make up the total amount they need with that limit. We have reflected this view to the People's Bank of China. When I went to China in a delegation, I've explained to them, and they said that this is quite likely and they will actively consider it, and we're trying to get it implemented as soon as possible. And what's your other question? And what other things have you been striving for? Well, of course, the $20,000 is only one of the items. Before it's fully convertible, and on top of the many restrictions on capital account. When it comes to cross-border capital flow, say for example there is surplus deposit in Hong Kong, the capital pool of renminbi is bigger. We have about 100 billion bank loans, which is quite good. Do we have surplus to give loans to the mainland? There are still a lot of restrictions. In Tianhai, there is a pilot scheme allowing loans to be made to enterprises in Tianhai subject to a quota. On top of that, we have the Shanghai FDZ. Then they will all be beneficial to Hong Kong's development in terms of offshore renminbi business center. The public would like to see the relaxation of the 20,000 renminbi exchange limit implemented as soon as possible, and our role as the offshore renminbi center get better. Well, without any other issues, I call meeting adjourned. Thank you.